Good to go.
Okay. Good morning. This is the meeting of the Police and Fire Retirement Plan Commission. Today is Wednesday, December 14, 2022. We will go through some public items and we will then break into executive session to consider matters of finance relating to the police pension fund. Nikki, do you want to call the roll of attendees?
I have the list already of the attendees.
Okay. We do have a quorum, so I do call the meeting to order. The first item of business is a review of the minutes of our October 6, 2022 meeting. We will deal with approving those pieces of the public meeting separately in executive session. We'll review what was recorded of the executive session. Are there any comments on the minutes? As the minutes were distributed earlier and hopefully read by everyone, do we have a motion to approve those minutes?
So moved.
Second. Do we get a second?
Second.
Okay. Those in favor signify by somehow indicating aye.
Aye.
Anyone opposed, loudly speak your opposition. The minutes are accepted as presented. The next item of business is a review of the general investment markets in which we operate. And for that, I turn the meeting over to Mr. Jones to give us a summary of where we are today.
Great. I will share my screen. Well, good morning, everyone. Let's see. So we put together a flash report as of November 30th for the retirement plan. And I'm going to review the market environment both through the end of November, but also I provided an update through the close of business yesterday. And then after we do the market review, we do have two managers coming in, Wellington and Cook and Beeler, and they are queued up at 9 o'clock and 9:45. So we might break for them at 9 o'clock, but I'll be done with the market review by then. And so let's go. So here we have a market review through November 30. And what we're going to focus on is the middle of the page, which is the year-to-date performance. And I guess, since we last met, the only thing that has changed, because we're still in negative territory, but in general, I would say we are less negative than where we were during our last meeting in the equity market, and sort of similar to where we were in the fixed income market. And the challenge in 2022 has been the correlation of returns between equities and fixed income. Typically, when we see a significantly negative equity market, we often see better relative results coming from fixed income, because often the negative returns from equities come from a weaker economic environment and poor earnings coming from companies. And typically the government responds to that by pulling a trigger which lowers interest rates, and you get more favorable bond market returns, because as rates fall, fixed income values go up. Well, the inverse of that is true in 2022. We have a significantly negative and really one of the worst fixed income markets on record in a short period of time. That is a result of the government raising interest rates to try to slow the economy down and to ward off the pressures of inflation that are a result of the massive stimulus that was provided by the government in response to the pandemic. So in looking at the numbers, first of all, we should take away that the more near-term performance has been positive in the equity market. And for the month, we've had positive returns coming from fixed income as well. So we've had rates drop a little bit, which has resulted in pretty decent results for a 1 month period of time, the month of November. But you can see in the equity market, we had a really strong month of November, and we finally have seen better results coming from the international markets, both international developed, which is the EFI index, and international EM, which is emerging markets. So that's countries like China, India, Brazil, what have you. Just in the month of November, they were up over 11 and 14%. And part of the reason for that positive performance is that the US dollar actually weakened a little bit over that period. So when the dollar weakens and you're invested internationally, we convert back to US dollars. But if the dollar weakened, then when you convert back, you get to buy the dollar back at a cheaper price, and that adds to the return of the international allocation. And then looking at the year-to-date period, we have the S&P 500, which is representative of large US companies, was down about 13%. Just a touch better return coming from medium-sized companies. Mid-cap was down about 12.5%. And small cap companies represented by the Russell 2000 was down 14.9. We still see a really big performance differential between companies that have a growth orientation and companies that have a value orientation. You can see value year to date was only down 3.65, but growth was down 23.25%. And then on the fixed income side down below, you can see the US aggregate index is representative of the highest quality investment grade bonds in the United States. And those bonds were down about 12.6%. The corporate investment grade was down more than 15. High yield bonds, which provide a higher coupon or higher yield, they actually have lost less. Now, technically, those are lower quality bonds, more risky, but high yield has performed better than investment grade, being down only 10.6%. And then global bonds were down 16.7%. So then I provided an update in the materials I sent out to you over the weekend. The period I showed was December 9th. This morning, I updated it through close of business yesterday. And if you look under the year-to-date column, you can see that year-to-date, the equity market is down about 14.3%. So we've had a little bit of a pullback in the month of December. You can see MTD is month to date, and month to date for US equities is negative, so that makes the numbers a little bit more negative in comparison to where they were at the end of November. But you have seen a positive result coming from international developed. You can see international developed was up 3.4% in the month of December, month to date, and is only down 11.6 on a year-to-date basis. And then in the bond market, we've had continued positive results coming from bonds, but still negative year-to-date, as detailed. I can't remember if I mentioned this at the the last meeting, but one of the things that I've been pointing to is that, prior to entering the uncertain environment that we lived in with the pandemic, which really started in like February of 2020 and continued for much of 2021. The market, the equity market, U.S. equities were at a all-time high in February of 2020. And in fact, they were on February 19th of 2020. That was sort of their high point. And then, from February 20th until March 23rd, we lost 35% of our value. But it's interesting to note that since the market high in February of 2020, the equity market, and specifically US equities, are higher today than they were pre-COVID. So, we tend to put more emphasis on what happened recently. So there's a lot more focus on year-to-date 2022 and the losses that we've experienced. But the reality is that we had a tremendous run in equities since the market low on March 23rd. And that basically was probably in excess of what we should have expected. And we've given some of it back in 2022, but we still are higher than where we were leading into the COVID downturn. And another interesting thing to note is that if at the beginning of COVID, you said, we're worried about equities and we're going to go into fixed income to be more conservative. Well, if you did that, you would have had losses since then, cumulative losses of 7.87% from investment grade bonds and 11.36% from global bonds. So basically, bonds were not a place to hide, over the past 2.5+ years. And you've done better in equities than considerably better in equities versus bonds, a 30% difference in cumulative return. Any questions on the market environment? Well, I should note that when we interview the equity managers, basically what we have seen, what I've seen in 2022 is that it's been a difficult environment for many active equity managers to add value. And part of that reason is that there's been a huge difference in performance. So if you look at the S&P 500 sectors and you look at the year-to-date return for the S&P 500 sectors in sort of the middle of the page, there's a big difference from one sector to the next in terms of where performance has been good and where performance has been poor. So just look at energy. Energy year-to-date through December 13th is up 61, almost 62%. And then you have, communication services, which are companies that in the communication industry that are down almost 37%. So you have 100% difference in performance between, two sectors of the market. And depending upon where a manager placed their bets, and some managers like Cook and Bieler is a value manager, and the energy index has about more than a 5% allocation to energy, and Cook and Bieler has, I think, a little bit more than 2%. And so if you don't have the full energy allocation, you don't fully participate on the upside, and that makes it challenging for managers to keep pace with the index if they're different than the index. And so in general, we have not seen a lot of value-added performance coming from active managers in 2022, as you'll see in a minute. I'm going to stop for a minute and see if there's any questions, and then I think we go into executive session. Joe, you're on mute if you're,
No, I wasn't saying anything, but.
oh, okay, I didn't know if you're
Waiting
saying.
to hear if anyone had questions, and they don't. Before we go into executive session, I received a message that I guess the city rules require commissions to appoint their chair and vice chair annually, which is something we've not generally done, I don't think. So I suppose the way to go about this is to take nominations for chair and vice chair and do a quick vote. And then we will go into executive session and we'll do whatever changes are required as of the beginning of the next meeting.
This is Kathy. I nominate Joe Simo to be the chair.
I would second that nomination.
Real quick.
Thank you. Are there any others? Silence means consent, so now's your time to voice. And then we need a vice chair. Thank you all for your continuing confidence. I do appreciate it.
This is Mike, and I would nominate Kathy.
No, Michael.
And I would second that.
Oh, okay, Mike. We'll
If
see.
if nominated, you will not, if elected, you will not serve. Is that what you're saying?
That's correct. You mean
I'm
as the
hoping-
chairman?
I'm hoping to stick around, Kathy, so I think you're okay.
Yeah, I'm
with-
hoping you are. Oh, you mean as vice chair, Michael?
Vice Chair.
Vice Chair, yes.
Okay, can I do that from a boat in the Chesapeake and from
We're
Florida?
zooming, Kathy. We don't know. Just do a decent background.
Yeah, you're fine.
Okay.
We've had members of commissions calling in from the Bahamas. Of course, that made our lives kind of miserable in comparison, but yeah, it happens.
Okay. All right, whatever.
Those in favor?
You owe me lunch, Michael.
Anyone
Okay.
opposed? No oppositions? Kathy, congratulations. You've won an election.
Thank you. Thanks, everyone. Thanks, Mike.
And we'll have a nice lunch.
With that, in order to discuss the well, before we do that, I want to express on the record my appreciation to the people in the finance department and to Nikki particularly who support our commission. Guys, you've done a great job for us over many years, and I don't know that you get sufficiently acknowledged for it, but thank you. And then, go ahead, Kathy.
No, I just said I agree. I second that.
And with that, I would ask for a motion to go into executive session so that we can review the performance of managers and how we want to handle public funds.
So moved.
Executive.
Anyone opposed? No opposition.